Good morning, welcome to the Phoenix Blue Update on Monday the 8th of May, presented this morning by Tom Colley. We've had the result from the French presidential election over the weekend, and as expected, Emmanuel Macron has won the election. He got about 65% of the votes versus 35% to the right-wing candidate Marine Le Pen. That was very much expected. We haven't seen any huge gaps on the markets as at the open, like we did a couple of weeks ago when we had the preliminary round of the votes. The reason for that is clearly that was the expected result, and we potentially are looking at a short-term sell-off in markets that had already priced that event in. Back end of last week we had non-farm payroll. We got some decent numbers on the headline figure there. We saw a big sell-off in commodities led by a big sell-off in crude. We've had OPEC looking at extending their production cap, which at the current cap also includes Russia. There's some uncertainty whether Russia would still remain on board. And there's clearly an opinion in the market that OPEC no longer actually are the controlling influence in the crude market because of the ability of US shale producers to switch on and switch off their taps effectively. They appear to be the ones who actually can govern price in the marketplace. Okay, so going over to the news events from Friday, focus on a non-farm payroll. We had the employment change number with a rise in the number of employees by 211,000 against a forecast of 194. Last month we'd seen a very poor figure, which was 80,000. It's been subsequently revised to 79,000. Not a big issue in itself. Possibly because I have read mixed reports on how this has been interpreted, and certainly the markets haven't interpreted it one way or the other too significantly. We had the average hourly earnings that came in as forecast at 0.3% on Friday. However, the previous month where we missed target, and I think it had been 0.3 then, had come in at 0.2, has subsequently been revised down again based on latest data to 0.1. So we had poor figures last month, and they've been both revised down in that area. However, we then had a positive unemployment rate coming in at 4.4% versus the forecast of 4.6%. So a bit of a mixed bag there. It's a headline rate which is certainly positive. I think that still leaves the potential, or the market foreseeing the potential of a Fed rate rise in the June announcement still on the table. Potentially, if that had been a poorer figure, that wouldn't have been the case. Obviously, we've got another non-farm data set out before that date, so that will be significant. Going forward to today, we've already had some data in overnight, which is good figures on the trade balance from China. That will be well received, certainly in terms of commodities, currencies, particularly the Aussie. The Aussie took a bit of a battering last week. Prices for iron ore in China itself, which is the biggest market by far for Australia, for its biggest export, which is iron ore. Prices took a tumble there. I've read that potentially is because after a period of restocking, commodities wise, there is now a lull in that, having stocks holdings having been increased to a more normal level. Today we have bank holiday in France, and then the only other thing we have is overnight European time we have retail sales for the Aussie. Okay, let's have a look at the charts and see where we are. It's very much a mixed bag at the moment, or a split bag in terms of where we've got the commodities currencies and the non-commodities currencies. We did see movement on commodities currencies last week. We saw a very much confined, range-bound movement on the other current majors and minors. This is the dollar index. As you can see, we actually had a small gap down this morning on the open of the market. That wouldn't be hugely unusual after any weekend. Obviously, the French election may have had a small influence in that. That gap's been closed, and at the time this slide was taken, we're still above the open, but clearly price is slipping back down to Friday's close again. We're below a key level here at 98.60 with the next level of support at $98 here. We have a commitment of traders, extreme signal, suggesting that the commercial players in this market prior to this week or to last week were looking for this market to go back to the long side. We did say that when we got a close below this, our bias would switch to a short-term bias of dollar weakness. We'll wait to see how today plays out after that French election, but it looks like we will be looking to potentially trade dollar weakness in the short to medium term. Over on the yen, we had price peaking at 113 on Thursday before pulling back slightly through Friday. Again, we've had bullish price action since then. On Friday, price is currently around Friday's close. We have two options here. We're looking for a break above that 113 level, which would be significant because of this relatively long-term channel that we'll be breaking out of. We'd be looking for a breakout retest as always, to take 113 to the long side as an end of day trade. There's a couple of levels through here that I'm also looking at on the short side. If we get a pullback in the short term for intraday trades back up to the top of the channel, our expectation will be the break of that channel if we see some dollar weakness play out, as I mentioned when we were looking at the dollar index chart. Over on the euro, well, the euro's at a very, very key level at the moment. It came into 1.1 on Friday, a round number, right at the top of a channel here, and also in terms of a triangle, in that we've got the peak of the 2016 peak and the peak through the election, Donald Trump's election night there, causing a significant area of resistance there. We've got a commitment of traders short signal there, but again, that was before the result of the French election, although, as we've already mentioned, that was pretty well expected that Macron would win that quite easily. The next level that we've opened at today, 1.1025, is actually a significant weekly level on this chart. So at this moment in time, we are waiting for this to play out today before looking at the possibility of where this goes following that election. But clearly we have potential for either a break to the high side or probably more possible a pullback before taking a move again to the long side. But we didn't really, we purposely chose not to look for any or place any end of day trades based on the euro until we reanalyze the chart towards the close this evening. Over on the pound, well, we can see the pound still being very much confined in this area through here. We had a box range for about a week there. We've had another box range through here. 1.31 is the next really significant level of resistance. So we will be sitting out of this market until we see that resistance level being reached, or a pullback, or any other event that's going to affect that. We've had the result of the UK local elections the back end of last week, with a clear victory for the Conservatives, a massive gain of seats predominantly from Labour and UKIP, suggesting that if that was reflected in the general election in June, we will see Theresa May and the Conservatives back in power with a significantly increased majority in Parliament, which was the purpose, or her purpose for the snap election in the first place. So that should provide certainty, or a greater degree of the certainty, to the markets, and we may see more pound strength based upon that. Over on the Aussie, there's one market that we were looking at last week. We had a big sell-off last week. We potentially had prices pushed up into the bank holiday on low liquidity by the institutions, only for them to sell off strongly and increase their profits by doing so. As you can see, I've already got an end-of-day order in this market at 0.7 dead. So no, that's not 0.7, but 0.75 dead, my apologies. Looking to take that short from the top of the channel, targeting a move to the bottom of the channel here around this next support level at 7,300. We have got our eyes on all the other commodities currencies at the moment. Kiwis rather range bound at the moment, and we're looking to correlate CAD with any return to, or any pullback to, significant levels on crude, but there's nothing really to show you there this morning. We will wait for a movement there. We got some quite dramatic movements on crude last week, so we need to see that settling down a little bit before we risk our capital actually placing trades. Okay, reminder that this coming Tuesday, that's tomorrow, we have an afternoon event of free live trading with the Phoenix Blue Fund Managers. If you're interested in that event, you can either go to Eventbrite or go through the website, the contact page of that. You'll need to move quickly because that's tomorrow afternoon. Also, on May the 9th, sorry, that is May the 9th, isn't it? It's that Tuesday, May the 9th. We have another event between 5 and 7 p.m. If you go to Eventbrite, you will see both of those events listed there. Okay, guys, that's it for today. Have a good day's trading. We'll speak to you again in the morning. Take care.